People have been predicting a hard landing in China for a long time, and we're of the view that a growth rate of 6%-ish, maybe a little more, maybe a little less, it's the world's second largest economy. There's plenty of room for growth. If you're in the infrastructure businesses and you take a long cycle view, you have to bet on China. You have to be part of it.
And they're going to buy some of your business, Hire stepping in where Electrolux weren't able to complete. Do you think that this deal will get signed off at the government and at the regulator level? Because I know there will be concerns about selling anything to China in the US.
We believe so. We believe it's really a very good strategic fit. It's really good for our business and our employees in the United States. They're going to commit to keep the headquarters in Louisville, Kentucky. They're maintaining employment levels. They already have a manufacturing base. They're a credible U.S. company, and they're a very progressive management team. I mean, if you look closely at Hire, they are doing things that a lot of companies around the world wish they were doing.
But there will always be those, John, and good morning to you, who will use China relationships or sales to China as a stick to beat up people with and actually beat the corporate sector with. And Donald Trump has been very aggressive about his language about Apple, not GE, and where they should produce iPhones and their goods as well. It's a lot more complicated than that, as you were saying to us off camera. But what do you say to those American politicians and those with a very loud stance in the US who say we shouldn't be doing so much with China, we shouldn't be exporting jobs to China, we shouldn't be producing American goods in China?
We have thousands of jobs in the United States that exist because we can do business in China. In our jet engine business, our gas turbine business, our healthcare business, all of this, it's a global ecosystem, it's a global supply chain, and it feeds into our production, whether that production takes place in the United States or another country. And because we have access to markets like China, we can maintain and grow those jobs.
The situation with the election this year does make closing of deals like Hire just a little bit more interesting and a little more sensitive. Do you think there is a risk that Donald Trump and others who want to bang this drum about America first climb aboard your Hire deal and start to create problems?
We're going to spend a lot of time with everybody who's interested in this to make sure that they understand the facts and the reason that this combination will help protect jobs in the United States and create a stronger business. And we think in the end that logic will carry the day.
John, let's move on to other issues as well. You and I were at an event last night, and it was a fantastic event where a lot of people had some really good exchanges of views about other issues, and things are very close to GE as well, and including the electrification of countries as well. How is GE's power and electric portfolio looking at these lower oil prices as well? How are your activities looking there? Is it less profitable? Is it more difficult to make money out of some of these areas because of what's going on in commodity prices?
It's a complicated answer, right? At one level, it makes fuel costs low, but it gives governments that need to invest in some of these technologies less money to spend. So one of the challenges is how do you get capital and connect capital from where it is, and there's lots of it around, to the infrastructure projects around the world that need to be financed. So this shortfall of infrastructure investment that you hear a lot about, one of the big reasons is that things aren't getting financed the way they used to, and lower commodity prices, whether it's oil, gas, copper, iron ore, coal, really creates pressure on governments, and we've got to be creative in terms of how we come up with financing solutions.